I think it's a pretty simple formula. It is consistency is king.
He teaches Spanish at a high school in New Hampshire and trades options in between classes with great success. Since 2017, he has grown his capital from around 500,000 to 4 million. So, what's his secret? Welcome, Ross Young.
Hi, John. Good to be with you.
So, let's get straight to it. What is your success formula?
I think it's a pretty simple formula. Consistency is king. Stay at it, and whatever you're doing, keep at it and develop it into a consistent formula.
So, tell me a little bit about your way into options trading.
I didn't find out about options until I'd been investing for a long time. So mostly I was just a passive investor for the first chunk of my professional life, just buying and holding through things like the dot-com era in 2007 and many downturns. I had nothing to do but just hang on. And then in around 2016 or 17, is when I found videos online from Dr. Jim at Tasty Live, Tasty Trade at the time, but now it's Tasty Live, and called Where Do I Start? He introduced the whole concept of how you get into this and what options are and the flip side options. I'd heard about the risky side as you could buy something and then make a lot of money or lose everything. And he gave the opposite side, which was the selling options. And it was very interesting. The high potential for return or high probability of a profit. And anyway, slowly built up from there and just being consistent with one trade and another trade and another trade and adding on and adding on and adding on. And that consistency over time is I didn't do it for a day or a week. I did it one day after another, week after another, contributing and adding and building, piling up wins over time, then 1 month and another month, and then a couple of years. And it's been a long road of little wins that has piled up to what I've got today.
And you are a small town high school teacher in Spanish and combines it with this.
Yeah, I was trading. All that learning was really between classes of, well, free time is watch a video and then the market's open and I'm between classes and put on a trade or manage a trade. And just recently is when I've kind of gone to part-time status or semi-retirement status, depending on your point of view there, when I'm coaching. And because I still like coaching sports and things, but I've got my days much more freed up to be able to trade or do chores that my wife has me do, or go fishing or some other things, explore the rest of life.
And we are going to get through your style of trading, what strategies you follow, how you manage the risk, etc. But tell me first, what type of options trader are you? How would you characterize yourself?
I think cautious and probably more cautious now that I'm not as young anymore and I've got to rely on some income that I generate. So more cautious, but also diversified. Like I use a lot of different strategies and apply them across a range of products. So there's not like a thing that I trade. I'm not at the zero DTs in oil or selling SPY puts all the time. I've done both of those things, but I do a lot of different things. So I guess diversified, but really cautious is probably the name of the game right now. I like to think of my portfolio, everything I've got out there, sort of like a team. I've got to have offense, these positions that will be a little more aggressive, and I've got to have defense, these positions that are much more likely to pay a smaller return. Now, as I shift my career focus, my offense is a little smaller and my defense is a little bigger.
You started by saying that consistency is king. Can you elaborate what you mean by that?
Yeah, I think consistency is king. And I use that phrase in a lot of things that I do. I coach in the gym here, strength and conditioning. And I use it there about you can't just come into the gym one day and think, now I'm strong. You've got to be consistent and you can't come in and try to do a ton of things right away. You've got to do just a little bit better than yesterday and then a little bit better the next day and a little bit better the next day. And those small wins pile up over time. And it's the exact same thing in finance, or it has been for me in finance. I can't go try to lay out all my capital at once in big risky positions and swing for the fences with hoping for home runs. I want small, consistent wins piled up over time with a higher probability. That's what I've gone through. So trades, like covered calls and short puts are probably the bread and butter of my trading style, is starting to get in with a trade like that.
How do you choose your underlyings?
Sometimes there are things that have caught my interest for one reason or another, reading the news sometimes, or sometimes they've been actually when I started trading, they were things that I knew about, things that I'd heard about, things that I had contact with. So things like Nike because I was into athletics, things like Microsoft and Apple because I used computers and things like that. So things that I knew about these companies, not to say that I knew they were going to be a success, but I had some concept of what they were about. And that still is today, is if I know about something or hear about something or I've read about it and this is an interesting company and I want some exposure there, I'll do that. I'll also do some where it's just the numbers make sense. It's got high IV and I like its current position, so let's put on a trade and take advantage of IV and bring in some theta. And then also there's just non-equity positions, gold and silver. I have a nice silver position on right now that's helping out some things. So it's not all equities, but equities are certainly ones that catch my interest. But it's not all just what's interesting.
Do you have some kind of a trading community where you live, trading buddies you're discussing with? I
Uh,
guess it's a wild guess that this was not the main topic in the teacher room.
yeah, no, no. They'll talk general finance with me, but as soon as you get into options, people just lose interest or think we're gambling, like we're in Las Vegas spinning a roulette wheel, and all interest is gone.
How many positions do you have on at any time?
I have a lot of positions on, probably 50 right now or so. In a low period when I'm trying to travel or do something, I'm trying to cut back, it'll probably still be 20 or 30. It's probably been a while since I've had only 20 positions on. And I'll go over 50. I'll get up to, I don't know, maybe 70 if things are really going crazy and I've got a lot of stuff happening. But 50 is a good number for me.
That's a lot of positions to keep track of.
It is, but some of them don't require as much attention. A lot of trades are kind of like they say, watching paint dry. You're just waiting. That theta is just slowly coming in through a covered call or short put, especially. Well, covered call, especially, there's not a lot to do. I'm just waiting until the theta has bled out of it or it's in a position where I can roll it out and maybe roll it out and up. So just a quick look of nope, nothing to do in those positions today, and we move on. Mostly I open all the trades and just go real quickly, like which ones I'm going to look at today. And out of the 50, there's maybe 10 that I need to look at today, 30 to 40 that I know they're fine today. I don't need to look at them.
But are they all the same time frame, or do you have different DTEs for different strategies, underlyings?
There are different time frames and a variety of strategies. Mostly, you could say most are going to be the 45, putting on around 45 days and coming off or being rolled around 21 days. I do a lot of rolling. So that last week of them, next week, I'm going to be doing a lot of rolling. It will be a much more active week next week than this week. And definitely last week was not a lot of activity. So that rolling week is a lot. I do things as well that are longer. So while most of my positions are in June right now, there's a lot of July and a few in August. And I think that's probably the longest I have right now. Maybe one or two that are further out than that, but that's the majority, is around that 45 is what I'm looking for.
And many traders, like myself, have one main strategy. They follow one bread and butter strategy, so to speak. But I understand that you have a lot of different strategies at the same time. Is that correct?
Yeah, definitely a lot. If you know the Wheel of Fortune, that's kind of the thing that's in my mind most of the time, is acquiring shares, selling calls against those shares, selling puts maybe to get into shares or just to profit off it if it keeps continuing to run up. But certainly I love a lot of other strategies as well. I think I've used everything I know of.
Let's go into some of the specific strategies that you do, say what they are, and what you use them for, or in which situation you would use this strategy. From a list you gave me, short put is the first you use often. What is that?
I'm selling a put probably out of the money. The idea is that I'll get paid if a stock goes up, doesn't move, or comes down even a little bit. And if it comes down a lot, that's the place when I have to decide what to do. Do I want to take the stock or do I want to close my put? And I'll have one of two mindsets going in. One, I'm hoping I will take the stock if it's a company I like and I have the capital to do that. And two, I will close it at a certain loss percentage. I'm probably in the short put when I haven't had my mind clear, and it's too late. My losses are big, and now I'm either taking a bigger loss or taking a stock that I don't really want. But I'll definitely roll them into the next one you give me. Is probably you're going to ask about covered calls, is my guess.
Yes, you also do a lot of covered calls.
So if I have shares already, I'm willing to sell calls against them to reduce cost basis. And cost basis is probably something that's in my mind anytime I own shares, is how to reduce cost basis. So covered calls is a great way to do that and to bring in some income on things I already own. And I will usually sell them out of the money, and then depending on how big a position is or what do I want to do with this position will be how close to the money or even in the money I am. Right now I have some that are in the money, and these are stocks that they've grown, they're a big chunk. I don't really want to keep owning that big a chunk, so I'm hoping some get called away and I can use the capital for some other things.
And one of your favorite strategies is Jade Lizard. What
Yeah.
is that?
The Jade Lizard is really a combination of the short put and it combined with a, a, a short call spread on top of it. So the it may need a little bit longer explanation someday, but I'm benefiting from both sides here, and I have no upside risk. The key to this one is the width of your call spread has to be no bigger than the total credit. So if you're making a dollar something on it, you can only have a dollar width of your call spread. The put is out of the money. I want that stock to stay in between the two, and then I'm in a pretty good spot. If it runs up, I can roll the put if I want, or close it out for a very small profit. If it falls down a little bit, I can roll the call spread down if I want to. Oftentimes with these, I will roll the whole thing out, or just close it down and roll it to a short put. There's a lot of things I can do off of this, and that's really what I like about it, is its flexibility.
You also traded similar strategy that I didn't know, big lizards.
Big Lizard, it's the same thing as a short put and the short call spread, but in this case, the shorts are at the same strike. But the same thing is, I want that call spread no bigger than the total credit. The credit is usually a lot bigger than the Jade Lizard by itself, because those strikes are right at the money now, those short strikes. So it's a bigger credit, benefits from no movement, and the price of the product is got to be right. It really doesn't work if the product is too expensive, because then I'm risking a lot of capital there.
But both these lizard strategies are slightly bullish, I guess.
Yes, you can do reverses as well, where you're selling the call and a short call and then selling a put spread. The numbers work a little bit better when it's a regular one, but I have done the reverses as well. Reverses work a little bit better if I own some shares, so that call is covered, and then I'm kind of not worried about the upside, but I've also got a short put spread on there. I have one of those right now.
And then you do quite a few ratio spreads and also broken wing butterflies, which are a bit of similar trades, aren't they?
Yeah, they're really the same trade. It's just whether it's the broken wing butterfly will be the defined risk version, and the ratio spread by itself will be undefined. And that's usually how I do them: two shorts to one long. It's usually two short puts to one long put. Sorry, two long puts to one short put. Maybe I've got it backwards in my head now that I'm thinking about it right now. No, two shorts and one long. Yeah, okay. It's when you have it all written out and see it, then you know what you're doing as you're clicking. But as I start to talk away from that, it can get confusing. But anyway, I like them for earnings a lot of times, because both of these trades are slow to develop. So if you set this up for 45 or 60 days, it could be a while before you see a profit or see it turn the way you want. But if it's an earnings trade and this has got, perfect would be if you did it on a Thursday and expiration is Friday. And that's kind of the perfect scenario, whereas you're going to get your movement and be able to deal with it the next morning. And those I like because they're omnidirectional, you could say. I'll make a small profit if the stock comes up, but if it comes down to my profit zone, below my long put, I'll make a bigger profit. So the way I look at this is like I'm getting paid a little bit to make a gamble. I guess it's not totally free because if it falls far, I've got to decide what to do. But it's a small risk, and again, it's something I can do. Like there's things to do. It's malleable. I can maybe take some shares in a terrible situation, roll into covered calls. But the thing is time. It happens slow if you set it far out in the distance. So I want it short.
And you also trade strangles.
Yeah, strangles is really a combination of my first two, my short put and then a short call. If it's covered, great. I feel much better if they are covered. So if I've got a position and I own some shares in it, and I'm comfortable with the size of the position, wouldn't mind if it grows a little more. I'll cover that position, add a short put. So most of my strangles, more than 50% of them would be covered strangles. Although
Mm.
I know regular strangles at the 30 delta are very very popular. Most of mine are covered.
Ross, why so many different strategies?
One, the entertainment value is like it's fun to be able to do all these different things. There's always something to do, and if you've got some kind of an underlying that's interesting and you want to get into, there's something to do there. I always start with just, well, what would happen if I did a short put? What would happen if it's going to be a ratio call? What would happen if it's going to be a zebra? Also another fun trade. There's all kinds of trades out there, and you can get creative with it. So it's for me, it's more than the mechanics in that. It's maybe, I don't know if you'd call it an art, but it's something to be able to be creative and see these different possibilities of what goes on. I also like the diversity in direction, in time, and in what could happen. If do I want to play this really neutrally, like I'd like to have nothing happen and the market stay in a range. But if all your trades are there and you get it going, the market moves one way or another, that's a problem. So if all your trades are one way, yeah, I'd like to have some diversity.
Is there some common criteria for how you select the strategy?
I don't know if there's a common thread. I think that I don't want to get overweighted anywhere in terms of a type of trade, a particular underlying, a particular time zone, or even a delta. So I love a little bit of diversity. And, even any one time, my trades are all trending in one direction. So it tells me to look for some other things. If I've got a lot of short puts on, time to start thinking about what other things can I do. It provides the interest. Well, I'm going to come back. Some things are just purely out of staying in touch. Earnings trades, I don't think are particularly valuable to do as far as how much they're going to generate. Like those should be very small, and I like to keep those really small, but they keep you in touch with what's going on, with sharpening your skills and keeping interested in what's going on.
What are your main rules for managing your risk?
This is an area that I'm working on lately because of I'm pulling back from work and I'm going to start to rely on my success in the market. So I would also have to pay for my failures in the market if that happens.
Mhm.
So I've got to keep things under control. I've got to watch size. Size is number one. I can't grow a position too big. Any one position cannot take me out. I've got to stay small with a. I don't mind just trading one lot to start. If I'm not sure what I really want to do, just trade a one lot and see how it goes. I love to experiment with things. So let's trade a one lot. Oh, it's a new trade I haven't really tried out too much. Let's try a one lot in a small product and see how this goes and how it's manageable. Start with my loss rules in my head of like, okay, I'm gonna close this down. If this gets to a 3x loss, close it down. That's kind of a standard situation. If it goes beyond that, I don't want it to get beyond that.
Mm.
Uh,
Do you keep many trades to expiry?
No, no, very few. Rolling is very common though. I roll all the time if it's got a reasonable IV and I can still make a percentage. 1% is a nice round number to look for per month as I roll out. Percent in what the total risk is there, then I like that. And I'm happy to just keep rolling and rolling and rolling. So, next week is going into 121 DTE. I'll be rolling I'll be pretty aggressive with my price, meaning not many trades will go through earlier in the week, and then as I get further on in the week, I'll be more willing to take any kind of bid or bidder offer to get the roll. And by Friday, I'll have almost all of them done, and I'll leave a couple to the following Monday or Tuesday.
I cannot imagine keeping track of 50 positions, but probably also having some rules for how you look at your overall portfolio to look at the total risk. How are you doing that? Are you kind of following the total delta of your portfolio, or you have some kind of rules for how you ensure that you do not have too much risk on your overall portfolio?
I'm generally always long delta overall, thinking about market drift, the upward drift, and I think I have to be bullish, but I do have short delta positions and plenty of neutral delta positions, but overall long delta, and I want to be able to survive any downturn. So I can't use all my capital. I want to have plenty of capital to be able to cover whatever losses I have and start over or continue trading if disaster hit. So a couple of weeks ago, we had this whole tariff panic at the beginning of, what was that, April? And that was the week I had just started or finished my teaching and was going into, this part-time thing. And that week was a little bit scary, but I trade small enough that I was okay. Like, things were red and it was getting ugly, but I survived it. And that is the world of options. You have things to do, things you can do against positions, things you can do to balance things out or to minimize risk. Whereas before I was an options trader, you just didn't look, or if you looked, it was, oh my gosh, I guess we're just hanging on. There's nothing you can do. Take your beating and move on.
We said how much your account has grown. What does this translate into your annual results on your options trading?
It's a little tough to put a number on the options trading because I got stock positions and I got, in the US they have IRAs that you have limits to what your employer is putting together for you. So, I count that towards my overall portfolio, but it's not tradable. So it's a little bit tough to put a number on it there, but I think, in individual positions or chunks, I guess, of my portfolio that I can identify. My goal is 1% per month. My goal, and I think if I make that, I'm beating the market, and I don't mind going beyond that, and I certainly do, and I have some years, but I get nervous trying to do a lot better than that, right? I don't want to overextend and find out I was overextended, and now I'm getting hurt really badly. So particularly now, 1% is great. If I can do 1% a month, I'm perfectly happy, and that will be fine.
What now, Ross? What are your plans for the next years when it comes to your trading?
Yeah, I think this is kind of the thing, is I have to change or I am changing my overall goals and what I'm doing. I guess I had my team was mostly offense and I had some defense. I'm in the process of getting more defense and smaller offense. So more in covered calls and short puts and these things that I can do 8% a month. They're not going to bring in 30% in the next 2 weeks. It's going to be much more predictable. My probability of profit should be high, and I hope it stays high. Yeah, I'd like to turn this into or keep it going so that I can stay in touch with what's going on, have something to do every day. It's fun. It's not just one trade, but I have we talked about the ones I have the most of, but I've got a lot of others as well. Some underlyings that I've been in for a while. I have several different positions there, and yeah, the interest is good. I'd love to be able to teach some other people or find a community like you've got going and to share what we're doing because it's fun and I think there's a lot to be learned.
You are now in a freer position, will spend much more time on your trading, but also depend on it financially. How do you pay yourself from your trading?
Yeah, I actually am not in that position yet because really I'm working part time, I guess, and my wife is still working part time. Together, we're sort of sharing a job. So we've got that income, and our insurance is always something you have to kind of factor into things in the United States. This is our first year doing this, so we'll see how this goes. At some point, we'll start to rely on it as an income. That'll be a little bit more of a there's some different US accounts, like how old are you when you are able to withdraw from these. What I probably will do when it comes to the options side of it is what I have been doing. The options, when I get profits, those profits don't just get turned into a bigger options account. they may get turned into a stock holding. And then so that's why I have a little bit of trouble figuring out the percentage, because now I've built the stock holding and I can sell shares, sell covered calls against that. And the options account will grow more slowly than you would think an options account is growing. If I say it's growing at 20% per year, it's not growing at 20%. It's generating profits 20%, but a big chunk of that is going to the defense, I guess, maybe T bills or some equity position that I'm holding and selling covered calls against.
How will you sum up what we have been through and how you trade?
I think if someone's learning to interested in getting into this, I think you start small. And really, I've gone with the tasty live mottos of trade small, trade often. And that has been the key to success for me. Doing a lot of things, just very small and very consistently over time. I think mindset is probably pretty significant when it comes to trying to get to financial independence. That's a much more holistic thing than trading. Trading is certainly the biggest tool in my toolbox right now on how I get here and how I hope to stay here.
And as a teacher, you are an expert on learning, so you probably have some good tips for beginner options traders. What would be good sources to learn options trading and to develop in this area?
I think number one is Tasty Live. They are fantastic. They've got the philosophy that I use, and they really know what they're doing. Dr. Jim is one of their hosts, and he's a great guy. The program that he did, you'd have to find it on YouTube or on their website now, is called Where Do I Start? Fantastic program. That's what I started with. He does a much more advanced program right now as well called From Theory to Practice. You don't have to be that advanced to learn from that program or any of the other Tasty Life programs. All these traders have a little bit different flavor to how they do things, but they're really interesting and they have some fun content and they'll help you along with what you're trying to do.
Would you have a couple of good books on option trading to recommend?
The one I think is valuable is what is it called? The Unlucky Investor's Guide to Options Trading. The Unlucky Investor Guide by Julia Spina. She's at Tasty Live as well. And she lays out the argument for selling options and not just buying long calls like you're at the roulette table and hope and win. I'd have two other book recommendations for you if you don't mind. Neither one is options, but they're finance overall. And this is maybe particularly for younger folks or for anybody just starting out, but The Millionaire Next Door really is the mindset book on how to think about money and how to think about managing your overall financial position. And then the other one is what is it called? Early Retirement Extreme. And that's more mechanics and details on how to think about life and manage your career and manage your finances and manage everything. So those two books have been tremendously helpful in the overall mindset.
And I will, of course, also recommend viewers to watch some of the other interviews we have had on this channel. We have also interviews covering a couple of the strategies that we have been mentioning, covered Strangle and Broken Wind Butterfly, for instance. Ross, thank you very much for sharing your trading journey and how you trade.
Thanks for having me, John.